Welcome to another episode of the brand called You, a video and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. Today, it is my privilege to welcome an entrepreneur from Mumbai, Rushabh Vora. Rushabh, welcome to the show.
Yeah, hi. Thanks, Ashutosh.
Rushabh is the co-promoter of SILA, which is a facility management, project management, and a turnkey consulting and contracting company. He is in real estate development, and very interestingly, he has played squash at the international level for India. So, Rushabh, what would you say are three key milestones in your life or your career?
Thanks, Ashutosh. Three key milestones, beginning out would be really learning how to play squash and, the whole game of squash, going on to playing competitively as a junior, then, using that route to, get heavily subsidized education in the US, to play for a college there, which was with a very successful team, which allowed me to work with teams and really understand what it is to work with people or play with people from, over 15 to 16 countries that were all on my team there. So I think that's one key milestone learning lesson. Second is starting SILA. For sure, we started out in 2010, didn't expect to be where we were right now. Frankly, entrepreneurship was not as much of a buzzword, or not as happening as it was in 2015-16. We started off in 2010. So I think that was something that was, again, a second milestone. And then the third would be just taking it to where it is right now. From more of a startup to a company that is of some scale. And now, the next challenge with this is to actually scale this business.
Wonderful. So let's talk a little bit about your first milestone, which is squash. Tell me what goes into building a squash champion and how do you train before a big match?
So look, I wouldn't call myself a real champion, but I'll tell you what. It's a lot of hard work. You learn how to lose early on. I think what goes into training is just hard work, learning the disciplines, putting the hours in, and I guess, it's like any sport, right? You want to get good at anything. It's a lot of hard work. You got to have the talent. I wouldn't say I'm the most talented human being in the world, but I did put in the hours, especially after I was done with like my 10th standard.
Okay. And at what age did you start playing squash?
Early, very early. So my parents played squash. My brother picked it up when he was 10. He's 2 years older. When he was, I think, 9. So I started holding a racket when I was 6 or 7.
Okay.
And then, as time moved on, the first time I actually traveled abroad to play was when I was 10. Wow. So, we started playing quite a bit. We've grown up playing the game.
Fantastic. So, Rushabh, let's now talk about SILA. Tell me what SILA stands for and what kind of work do you do?
So SILA stands for purity of thought and morality in Pali script, right? We started the business in 2010. We've got two businesses within the umbrella. One is a services business, which is what we started off, which I run, which is more to do with facilities management. So it'll be cleaning, maintenance, etc. of large buildings. We service 2 airports in the country. So it's facility management there. The second piece is, after we learned how to maintain assets, we said, let's figure out how to get on the project management and learn about the execution of those buildings, right? So we then built out the expertise to do that. We formed a JV with a US-based company first, bought them out, and now have a project management business. And along with that, we have a contracting piece, right, which is for interiors only. So what we do is we maintain your building, we help execute the base build, and then we can also help with the interiors where we actually do the contracting. That's the first piece, which is the services.
Okay.
The second business is run more by my brother, which is fairly new. It's a development platform of sorts. So where we undertake development, what we've done is typically brownfield. The strategy is a brownfield strategy where we're looking at distressed assets, providing last mile financing, and using the expertise and capability we built in the services to actually execute for that business. So we've got a fair amount going on right now, and what we're trying to build out is a development or real estate platform that owns the operations, owns the development, and over time hopefully owns the financing.
Amazing. And what would you say are some of your strengths as compared to the other facility management companies and real estate developers?
So, interesting question. We come from a very, very different background. Vis-a-vis, let's say, all the other facilities management companies. Let's start there, right? Typically the people that run these companies that come from a hospitality background or are large multinationals who have now come to India, Sodexo or JLL or whoever it is.
Yeah.
Or you have people from the services background, right? Very rarely, if you look at our team as well, the core management team will be young engineers, finance, MBAs, US educated, that kind of background. So where we're different is we're a lot younger as a team. We started this business in our early 20s. Now we've got a team of, entire employee force about 6,500, but 250, 300 in the main, 200 within the main offices,
wow.
etc. So it's a very young team. On average age is low, so we use a lot more tech. We put a different spin to it. So I think that's what makes us different on the facility side. On the developer side, again, we're very new to it, but we strongly believe the way development is moving is post all the reforms, RERA, starting demonetization, RERA, GST, IBC. All the reforms that have happened. It's the larger developers in the long run that will, the market will consolidate and is already consolidated. So it's developers with stronger balance sheets, stronger names, the Godreges, the Oberois, the Brigades, the Embassies will thrive. Okay. And then you have the smaller people who are earlier land aggregators, that will struggle. We kind of see ourselves as a good bridge in between both. We understand more of the institutional language, and we also understand how to build ground up. So I think that's kind of where we are. Again, very young team, and let's see if that works out.
So tell me, real estate in India has traditionally been very, very unorganized, and even today it's largely unorganized. But with the entry of organized players, how are you changing this business?
Look, so are you referring to development or services? More on the
everywhere. Services was unorganized, development was unorganized, brokerage was unorganized.
Yeah, so I'll take services first, right? So services has been, and typically the services market that we operate in the most, which is the facilities market, is still 60% unorganized, 40% organized, right? Okay. However, that was a 30-70 when we started this business 10 years ago. So we are slowly seeing a shift towards organized. On the macro front, there's a push towards higher compliances, minimum wages, institutionalizing of all of that. So there's a solid macro tailwind in any case from moving things from unorganized to organized. So that helps, where basically that's a part of the wave we're riding and making sure we're amongst the better organized players. So we've gone into remote parts of the country. We've gone into places, remotest parts of Gujarat or in the east or in the south, where typically you never think of an organized player going in and actually servicing a plant for a Tata Steel or whoever it is, right? So, we are, that market is moving towards being organized, and we see that just, as that happens, more that shift is great for us. The size of the market opens up more on the services front.
Okay.
On the development front, again, as I said, right, there's enough reform that has already happened and is continuing to happen that will result in developers that have stronger balance sheets grow more and more, right? So you will have the one-off developer who has one project, one or two projects. It's a very micro market. It's a very local kind of a business, right, in most parts of the country. So it will be localized, but the large institutional developers, you will only see a few of them with very strong balance sheets. And so it is all moving towards becoming more and more organized, and that will only increase with time.
I understand. And so I didn't realize that you were all over the country. That takes me to a logical next question. What were some of the challenges you faced when you started to scale up beyond Mumbai?
So yeah, we're in 75 cities. I think 75 cities, and probably about in every single small or big city you can think of. We're there, starting from Leh to Ladakh to right down south and the northeast. So look, I mean, it's people, right? You've got a high. I mean, we've got offices all over the country now. I think the biggest challenge with scaling is making sure you can build process, you can build tech, right? It's getting the right people, hiring well, hiring right, selling the vision and making sure that they are able, that the office in Delhi or the office in Bangalore, the office, elsewhere feels like the office in Bombay, right? Or the culture, the SILA way has to be kind of replicated everywhere. So I think that's the biggest challenge, right? So you've got to actually get down, spend time there to kind of set process, set system, and do that. So I think that's been the biggest challenge. Besides that, I mean, yeah, I think that would, if there's one thing, that's what it is.
And operating across 75 cities in India, that itself must be requiring a lot of time from you and your brother.
So, we obviously have hub offices in, 9 or 10 cities. And then when I say 75 cities, it's typically projects, it's client projects that are going on all over the place, right? It does take time. We are spending a lot less time on operational stuff now. Earlier, back in the day, we really go down, get our hands dirty in 2012, 2011. As we build teams, we build process. Obviously, there's more structure. So we are fairly busy. I would say during this pandemic, I keep saying it. The effort to output ratio has been the worst we've ever seen. At least I've ever seen, and my career has not been that long though. But that's the worst I've seen. The amount of hard work you have to put in to get a result is insane. So that the workload has, I would say, gone up by 20-30%. But you obviously got to put in the hours. If we don't do it in our 30s, when will we do it?
Correct. And, since you focus a lot on facilities management within your group, most condominium complexes now in India are being managed by facilities management people. What are some of the challenges you face as a facilities manager with the resident welfare associations?
So we work a lot with resident welfare associations, right? A lot of them. We do some work at DLF projects in the north. A lot of the high-end ones in the west are actually serviced by us, the bigger names, and a few in the south. It really depends, right? We actually like to work with resident welfare associations more than developers. There's two pieces to this. One is from a cash flow side standpoint, you always get your money out faster working with an association versus a developer. However, here you're dealing with 100 owners and not one owner, right? So there's two, it's what you want to choose. We've encountered every type of problem, right? It's insane. And I mean, I'm not at the front of it, but my team is very, very often. It's a challenge, but then, there's a trade-off, right? So there are some companies that some of my competitors don't work with welfare associations at all, for the reason that the time spent is a lot, right? The way we look at it is you work with an association, you're there for the longer run. If a developer develops a building over time, hands over to an association, right? We think there's value there because A, the cash flow cycles are a lot better, and B, you actually are able to mine that building for more commercial work. So yeah, it's challenging. There's a lot of owners. It is a pain, to be honest, sometimes, but that's a part of the business.
So as you built SILA, what kind of values have you built into your organization?
So I'll tell you, right, and what we've tried to focus on is, and we've put this on our website, but that's really what we try to do is try and be proactive in a way, aggressive, go-getting. That's kind of the culture. That's one value. The second or the most important one is transparency, right? I think, just honestly, we have a no-nonsense policy for any corporate governance defaults or any
Right.
doing all of that stuff, right? So that is something that is a value we've driven in very early, right? And the nature of our business and the nature of real estate, and it's tough to sometimes just say no. But we've now made it a conscious effort to make sure everyone says no, and that's something that we're very, very clear about. So one is on the honesty part, and the next part is on the transparency part, right? So we are very transparent with our numbers, with what's going on. So we have town halls, etc. So as a company, we're very open book, right? Maybe too open book at times. Is sometimes we got the criticism, right? But so everyone knows our numbers, everyone knows what's going on, where everything. So I mean, that's kind of the culture we built. It's very, very aggressive. It's very, in terms of proactive is probably a better word, and honesty and the transparency piece is the second value that we really focus on.
Very interesting. My next question to you is, as a millennial or a Gen Z, you probably are
Millennial
between the two of them.
Yeah.
Rushabh, tell me, how are the Gen Zs and the millennials changing the real estate business? They don't want to buy; they prefer to rent. So, what are your thoughts?
So I'm a renter myself, right? I just think that, I mean, now post COVID, I think, I think that order might change a bit. But if you look at what it's been for the past 5 years from a home buyer or home renter's point standpoint, your yield is, has been 1-2%, right? 2-2.5% max, going up to 3% in some cities. Does it really make sense to buy a home if you're not seeing crazy capital appreciation, which at least in the place that I live in, in this part of Bombay, in the south, we're not going to see much in most micro markets, right? So it's not made sense to buy a home unless it's your first home and you need an address or you have parents, etc., which I had to do is buy my mom a home. But, so that's one thing. However, I think that may change, and my mindset is starting to change a little bit given what's going on. You see, your mortgage rates are an all-time low, 10-year low. The spread between your mortgage rate and your yield is now, I think, sub 5%.
Okay.
So it kind of might make sense to look at it. Prices are softer. I think on the real estate side, there's enough stops from the government. You have Karnataka, Maharashtra giving you this capital gains, this stamp duty waiver. I think now premiums, I don't know if you read, they just got an, there's support from the government on premiums that might bring prices low. So you might see an opportunity to get a good deal right now with mortgage being, with rates being this low. There may be an opportunity to buy. I think that's what will spur residential real estate over the next, I would say, 12 to 18 months for sure. The last 3 years has been great for commercial. Residential, which is 70% of our market, has struggled. But I think that might change. So to answer the question, I'm still a renter. I think the yields are too good. I'd rather take all my savings and invest it in the market. The thumb rule is 100 minus your age, that much goes into equity. That's kind of what I follow. So that's
okay. Well said. And one more question for you on your business before I move to the next segment for you personally. You just mentioned that the real estate prices in commercial are stronger and real estate are softer, right?
No. So commercial is now post-COVID, it's very different, right? So pre-COVID, commercial real estate saw a boom, right? The last 3 years, pre-2019, 20 March, were great for commercial real estate. The amount of activity was crazy. What has happened then, I think the 6 months post-COVID, it was all a lull because no one knew what was going on. And I think the entire market was stuck. However, post-October, residential real estate across the board has done really, really well for, bunch of factors. As I said, rates, government incentives, stamp duty waivers, all of that stuff. I see that we actually personally see residential doing a lot better than commercial for the next 12 to 18 months. Okay. Residential, industrial, logistics, warehousing is where it's going to be at. Retail, hospitality, commercial will struggle. And that's kind of the way we see it. I mean, look at our facilities clients. We've been meeting some of our clients, our largest MNCs around, right? the big tech companies, the giants, they're all saying we're either coming back to office on July 1st or we're going to take a call on July 1st whether they extend to September.
Very
So
interesting.
that's the issue where we're going to see. So the larger Indian corporates are starting to trickle back into the office now. I think by April, a lot of them will be back. But, there will always be an element of social distancing even when they come back. So, they will continue to need their office space that they have, but is it going to, are they going to take up more? Not at the old rates.
Very interesting. Very, very interesting. So let's move to time for 2, maybe 3 questions for you personally.
Sure.
So what does success mean to you? I mean, I know success will change as you go forward in life, but at your current stage, what does success mean to you?
Very honestly, for us, I think I'll speak for me and my brother. I think goodwill matters more than money, right? So we've seen tough times growing up, and one thing we learned is that goodwill stays for life and money comes and goes, right? So I think success is if you're able to build, be known as someone who can be trusted, investors invest with you, that you're, working in their best interest, build that goodwill, whether you deliver the return or not is a second story, but, understand that you're someone that understands that raising money is an obligation, not an achievement. Right. So, it's goodwill, right? So I think if you're able to build, I'd rather build, I'm not giving names of conglomerates, but, a large conglomerate or a large company over time that is known to have the right values, etc. I'd rather do that than be a conglomerate that's worth 2x more.
Okay.
Right. So that's kind of what I would define as success.
Wonderful. My next question is that, you've been building such an amazing organization across the whole country. Who or what inspires you?
Frankly, I mean, before we started out, we really, we just took it a step at a time when we started up. If there's some people specifically that inspire me, it's anyone that's fallen and risen back up, right? I watch a lot of sport, and Tiger Woods is an example, right? I mean, yeah, he had his issue and personal problems and all of that stuff a few years ago, but you see how he stands up and comes back to it, right? So you have cases like that. Richard Branson, someone who's gone down a few times and then come back up. So, that's the kind of stuff, because that happens in business. This year could not have been harder. If you asked us in Feb last year, we thought nothing can ever go wrong. And we were, just really crushing it. And then you just have this thing that comes and just, bolts you straight. So I think, resilience and the ability to bounce back is something that's anyone that can do that well can inspire you, and you got to learn from it.
Interesting. And my last question to you, and this is for the hundreds and thousands of people who watch you and me talk and hear you speaking. What would your advice be to a young individual starting off on their entrepreneurial journey?
A few pieces of advice, that I actually, if I have to say 2 or 3 things, right?
Yeah.
One is, if you're sitting and raising money, please understand that, it's an obligation, right? You have a lot of entrepreneurs, especially when you went to Bangalore in 2015, 16, 17. It was all about how much have I raised, what have I done, and no one really understands that, you need to return an IRR specific XYZ to an investor. You take it some way. So respect the people that kind of back you. That's number one. And second is, this is personally for me, kind of know what you don't know. So build a business. If you're a tech entrepreneur and you know you're a tech entrepreneur, then build a tech business. If you're someone like me, focus on the fundamentals. You don't need to be a company valued at 300, 400x. Build something that, is a fundamental business, has cash flows, can build you, that you can see through, in the long run. So that's kind of 2 pieces. One, when you're raising, respect your investors, respect the money. Second is, don't try and be who you want when you're building a business. There's 2 types of entrepreneurs. We tried to build a tech business a few years ago. In 2015, we got swayed. and said, let's try and do a home services business, which was a tech app. It was called Mr. Home Care. Within 6 to 8 months, and we raised $1 million to do that, right? And within 6 months, we realized, listen, we don't know how to burn money to acquire customers, not our DNA. We gave all our investors the option to take, at an 18% IRR, take their money back or swap them into the company. That's kind of, we realized what we had to do. We had to be nimble, pivot immediately, and that's what we did. So that's kind of the advice I would give.
Fantastic. Rushabh, thank you so much. It's been such a pleasure speaking to you. I wish you and SILA lots and lots of success.
Thanks a lot. Thanks, Ashutosh.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.